Welcome back to Algobot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host at Algobot, and today we're exploring an expert advisor called Baseline Excursion Reversion. This is a mean reversion strategy built around a single moving average baseline that acts as a fair value anchor. Over the next few minutes, you'll learn how it measures how far price has stretched away from that baseline, how it waits for that stretch to start releasing before it acts, and why it only takes trades when the market is calm and range-bound. Everything here is educational information only, so let's dig in. Let's start with the big picture. Baseline Excursion Reversion is a mean reversion expert advisor. That means, instead of chasing momentum, it looks for moments when price has drifted unusually far from what it treats as fair value, and it studies the conditions for that stretch to relax back toward the middle. The anchor for fair value is an exponential moving average of the closing price. Think of it as a slow-moving center line that the market tends to orbit. The strategy then tracks what it calls an excursion, a continuous run of bars that all stay on one side of that baseline, either persistently above it or persistently below it. For each live excursion, it keeps two measurements: how many bars it has lasted, and its deepest penetration, measured as the distance from the baseline divided by the average true range. Dividing by ATR turns raw distance into a volatility-scaled figure, so a 2 ATR stretch means the same thing whether the market is quiet or busy. The mental image the code uses is a rubber band pulled taut. A deep, long-lived excursion is a band stretched far from rest, and the further and longer it stretches, the more tension is stored. Now, a crucial filter. The strategy does not fade every stretch. It first checks that the baseline itself is roughly flat by measuring the slope of the moving average over a look-back window and comparing it, again scaled by ATR, against the ceiling. In a strong trend, a long excursion in the trend direction is simply the trend doing its job. That's not exhaustion, and fading it would fight the market. The flat regime gate is designed to keep the strategy on the sidelines during those trends. This approach is aimed at traders who are curious about counter-trend, range-based logic, and who want to see how a rules-based system defines overextension, confirms a turn, and manages risk mechanically. As always, this is educational information, not a recommendation, and trading always carries the risk of loss. Let's walk through the mechanics step by step. The expert advisor works on closed bars only. Each time a new bar completes, it folds that bar into 3 running pieces of information: the exponential moving average baseline, the average true range, and the live excursion state. Updating the excursion is the heart of it. The strategy checks whether the bar closed above or below the baseline. If it's on the same side as before, the excursion length grows by 1. If it flips to the other side, a fresh excursion begins with a length of 1. Along the way, it records the peak penetration in ATRs and the structural extreme, the highest high of a bullish excursion or the lowest low of a bearish one. Before any trade, the regime gate runs. The strategy compares the current baseline against its value a set number of bars ago, divides that change by ATR, and requires the result to sit below the maximum trend slope. If the baseline is sloping too steeply, the market is trending and the strategy stands aside. Next come the qualifying conditions. The excursion must have lasted at least the minimum number of bars, and its peak stretch must reach at least the EntryStretch threshold in ATRs. Only a deep, persistent excursion counts as genuinely overextended. Then it waits for confirmation, the curlback bar. For a bullish excursion above the baseline, the strategy signals a sell only when the newest closed bar is a down bar that also closes below the previous close, showing the stretch is releasing rather than still extending. The take profit is placed at the baseline, the fair value it expects price to revert toward, and the stop sits just beyond the excursion's high plus a buffer of ATR. A bearish excursion below the baseline mirrors this exactly. The strategy waits for an up bar that closes above the previous close, then signals a buy, with the target at the baseline and the stop beyond the excursion low. There's one more filter. If the distance from entry back to the baseline is smaller than the minimum reward in ATRs, the trade is skipped as not worth taking. And as a management overlay, an open position is closed early once a bar simply closes back across the baseline, because the mean has effectively been reached. Only one position runs at a time. Let's read the code the way you'd see it in Meta Editor. At the top are the inputs. MA period sets the exponential moving average baseline. ATR period sets the volatility scale, and MinExcursionBars and EntryStretch define how long and how deep an excursion must be to qualify. MaxTrendSlope and slope loopback form the flat regime gate, while buffer ATR, min-reward ATR, and lots handle the stop buffer, the minimum reward, and the position size. Now the sell block. When the excursion side is positive, price has been persistently above the baseline. The code builds a bearish curl flag that is true only when the closed bar's close is below its open and below the previous close. If that isn't true, it returns and does nothing. When it is, the entry reads the bid. The take profit is set to the current EMA baseline, and the stop is placed at the excursion's peak high plus the buffer times ATR. If the reward to the baseline is smaller than min-reward ATR times ATR, or the risk isn't positive, it skips. Otherwise, it calls trade.sell. The buy block mirrors this. When the excursion side is negative, the bullish curl flag requires the close above its open and above the previous close. The entry reads the ask, the take profit is again the baseline, and the stop sits at the excursion's low minus the buffer times ATR, with the same minimum reward check before trade.buy fires. Both sides target the same mean and place the stop just beyond the structural extreme. Let's walk through this illustration candle by candle. The blue line running through the middle is the EMA baseline, the strategy's fair value anchor. Notice how gently it slopes across the whole chart. It's nearly horizontal. That flatness is exactly what the regime gate is checking for, and here it stays well under the maximum trend slope, so the strategy is permitted to look for reversion setups. We begin with the market sitting right on the baseline. Then the first candle drops below it, and the next, and the next. This is a bearish excursion forming, a continuous run of bars all closing on the underside of the baseline. Watch how far it travels. By the fourth and fifth bars, price has pulled sharply lower, and the distance from the baseline, measured in ATRs, keeps deepening. This is the rubber band stretching taut. The excursion has now lasted at least the minimum number of bars, 5 in the default settings, and its peak penetration has reached the EntryStretch threshold of 2 ATRs. The stop-loss marker sits down below, just beyond the lowest low of that excursion plus the ATR buffer. But the strategy still doesn't act. It waits for the stretch to start releasing. On the next candle, price prints an up bar that closes above its open and above the previous close, the curlback confirmation. That's the buy entry marker. The reason this makes sense is that a persistent, deep excursion has now shown its first sign of turning, and the strategy checks that the distance back to the baseline clears the minimum reward before committing. Now follow the trade. Price lifts off the lows, candle after candle, climbing back toward fair value. As soon as a bar closes at the baseline, the take profit target is reached. That's the take profit marker sitting right on the blue line. The whole idea was a return to the mean, and here the reversion completes. Now watch the mirror image unfold. Price doesn't stop at the baseline. It pushes through and begins a bullish excursion above it. Bar after bar closes on the upper side, and the stretch deepens again, this time to the top side. The stop-loss marker now sits above the highest high of that excursion plus the buffer. Once more the length and the peak penetration qualify, and the baseline is still flat, so the setup is valid. Then comes the curlback on the short side. Price prints a down bar that closes below its open and below the previous close. The stretch is releasing. That's the sell entry marker. The take profit is placed back at the baseline, and the strategy again checks that the reward to risk makes the trade worth taking before it fires. From there, price rolls over and eases back down, candle by candle, until a bar closes at the baseline, the second take profit marker, right on the blue line. Both trades share the same logic in opposite directions. Fade a deep, persistent stretch only after it starts to curl, aim for the mean, and keep the stop just beyond the excursion's extreme. And remember, this is a clean illustration. Real markets can keep stretching well past any threshold, which is why the stop and the flat regime filter matter. This is educational information only. So that's Baseline Excursion Reversion. We looked at how it builds an EMA baseline as fair value, how it measures each excursion by its length in bars, and its peak stretch in ATRs, and how the flat regime gate keeps it out of strong trends. We saw it wait for a curlback bar before fading a stretch, target the baseline as its take profit, and place its stop just beyond the excursion extreme, with an early exit once price closes back across the mean. Remember, everything in this video is educational information only and not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losses do happen. If you found this breakdown useful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like us to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.